growth stock, unlike startup, the risk is slightly lower, but then the potential for room for growth also a bit lower, because startup has a lot more growth potential. When people, when the VC invested in startup, okay, when the startup go IPO, wow, the VC walk away with 10 times, 20 times, 50 times kind of a return. But growth stock, of course, the company has already achieved a certain level of a skill, and then they have served, okay, decent size of market, so they have proven themselves in the early phase. So now they need more capital to go to a bigger phase. Okay, so of course the risk is slightly lower, but then potential is also slightly lower. Much smaller company compared to blue chip. Okay, don't have a long operation track record yet. Still have a big market not yet tapped into. Still are coming out with new product and services to serve the market. So these are growth stock, smaller market cap, but then have higher amount of potential for growth. Growth versus value. Value is more for stability. If you want to have sustainable gain, okay, stability, go for value investing. And of course, you also need to have patience. If you want to focus on capital growth, then you do growth investing. This one involves buying the company which is slightly higher PE, but then growth prospect is still strong. Slightly higher PE, but then you need to know when to exit. So if you don't have time, you go for value investing. Okay. You don't have time to monitor the market. If you have time to monitor the quarterly report and so on, every quarter follow with the news, then you can do growth investing, which will give you a slightly lower dividend yield, but at the same time give you higher potential for capital growth. So when it comes to growth investing, the most importantly is you need to find the growth catalyst, be in growth, cyclical, or turnaround. You must know what is the growth catalyst. Okay, turnaround may have some catalysts. It could be a management change. It could be a change of business model. It could be a injection of a new asset into the business. Okay, in cycle, it could be some growth catalyst that change the trend. In growth, there's also a lot of growth catalysts. So why should we go global? Now there are many stock exchange in the world. Okay, total value is about 69 trillion. Of course, this now of course the value is even higher. Okay, so the biggest one you see is NYSE. Okay, if you compare the global stock exchange, okay, the US is about 50% of the the size. Okay, it's as big as 50% the size of the total world stock exchange. Okay, and China is only 2.2%, but China I think will go up quite substantially. Now, if you compare Malaysian market, about 400 billion, and US market is about 30 trillion. Okay, so this is how big and how liquid the US market is. Let's say if our currency keep weakening against the others, then for the past 5 years, we see that Malaysian ringgit underperform US dollar, underperform Chinese renminbi, underperform our Sing dollar by negative 25, negative 14, negative 16. So it is timely that we need to learn how to diversify our asset abroad. So now the question is, how much are your asset in Malaysian ringgit? So if you're 100% in ringgit, maybe you need to consider, is it time for you to diversify so that you can hedge some currency risk?